I'm gonna start. I even invited people to this call, man, and they're not here yet. That's pain. But we move, man. Can't wait for people to do things, man. So let's go. Alright, so this one is, I had a few people that I wanted to start teaching the basics to. Saki, a few of my friends. They're not here right now, but I'm still gonna do this and put it on YouTube so they can access it at a later date. So basically, if just gonna go over a few of the things that I've gone over in previous calls. I'm going to be doing a series on this at some point. I've started the videos, but it hasn't been completed yet. So full basic trading course will be out most probably end of February. I'm going to set a date for the end of February for this. End of Feb. Alright, cool. So, starting with the basics, lines on a chart. So for me, lines on a chart are support and resistance, EMAs, which I use a lot, and Fibonacci, the Fibonacci levels. So starting with support and resistance, if I just get my main ones up here. So for me, support and resistance is obviously the levels at which price you get price reactions from. You know, you want to be looking for major swings on your time frames, and you want to be looking for at least, I would say, 3 previous touches of that price level before it becomes a valid level of support and resistance. On crypto itself, I would say you want to be charting at least the daily and down. Bitcoin and Ethereum are most probably the only 2 coins that people are trading regularly that you might be able to get weekly levels on. Possibly XRP as well, since it's been out since 2015. But really, it's the daily and lower that you're going to be looking at. So as you can see, I've got my lines showing the levels. They've been rounded up to the nearest 1000. And yeah, you can see that between these levels, there's just a lot of previous areas of
bro,
bounces, swings, and other things. What you saying, bro? And yeah, how do you draw these? So obviously you get your line on trading view, you just pick one out. Obviously I know from my previous levels that I want one around 60k. This is just subjective. You might want to have it somewhere near 61 or 62 if you feel like that's a better level. So you get the extreme highs here more, and you get sort of this price reaction showing the rejection of that level and the support here. It's really subjective. And then you just, but make sure that you're getting 3 previous areas of reaction, and then you just want to go through the chart and just draw these levels. And then obviously, because it's not just a set price, it's a range of prices, I just add on a rectangle to just show that it's a zone. And on Bitcoin, I will use like a $3,000 range. But obviously, I would say each coin, you're not exactly going to have $3,000 ranges. So you might want to pick a percentage for the range instead of looking at actual prices. Ethereum, it might be a 10% range. Bitcoin, it might be 2-3%, things like that. So yeah. So that's support and resistance. I'm not gonna spend too much time going through these. Before I move on from support and resistance, though, obviously you can see that I've drawn this on a weekly. I would say with your support and resistance levels, you want to be looking at least 2 or 3 time levels. So or 2 or 3 time frames. So we've got the weekly here, go down into the daily and just pinpoint some of these levels and see if you can find any levels in between the ranges that could be key for a reaction afterwards. So I'm just going to change this to just a different color. Just pick any one. This one's a monthly, but obviously it's not a monthly level that we're looking at. And you just want to see if you can find any other levels of reaction within the ranges of the higher time frame. And yeah, I use 3 levels, but on the lowest level, I start using horizontal rays, so I can kind of see where that level is valid from. So I can see how far back it goes, and when it sort of gained relevance, and yeah, just to show its impermanence compared to the other levels. So yeah, that's support and resistance and multi-time frame analysis. If you go on Baby Pips, you can get a little bit more information on all of those things. So I'm just going to clear my chart now. And I'm going to go on to EMAs. So EMAs, basically support and resistance, but dynamic. So if we look at the weekly, we can see that this 50 EMA in orange here is pretty much been holding up price since let's say since July 2020. Yeah, and it's come up. We got the large move up into April. It's come down, retested it, and yeah, it's just using it as support right now. If this breaks, that's a key move for a like key break in structure, I would say. So what you're looking for, I would say the EMAs, the higher the time frame, the more valid it is. As you can see here on the daily, we're kind of getting a swing. The 200 EMA has been broken, and we're sort of trading lower from that break and retest. So yeah, explaining the EMAs. The EMAs are basically dynamic support and resistance. They move with price instead of being static price levels like support and resistance is. So you can use these to place your buys, sort of find ranges within prices, find support levels, resistance levels, and sort of gauge trends as well. So like I said earlier, the Bitcoin since July 2020 has been holding above this 50 EMA on the weekly. Yeah. So it's been used as support on the weekly. If this breaks the 50 EMA, if price breaks the 50 EMA and retest it on the downside, and I would say breaks these lows, either this low around 42k or this low around 40k, it might actually be more of a range. Like I said, with support and resistance, it's a range of prices. If we see a breakthrough, into this zone here, so break through the 50 EMA into this zone here, and a retest of that 50 EMA to downside for over a few weeks we start trading off, then we can start sort of looking at trades from these levels up here, 42k to the 30ks, which is fairly bearish. I wouldn't say bear market, because obviously the bull market started in the below the 10k, so still a lot of bull to go before we get fully bearish. But I would say in terms of a bear market, I mean, that's a short bear market coming down into 30k. We would have a continuation of this bearish phase that we're in, or bearish market that we're in. So yeah, EMAs, support and resistance. We may see that if price does break through there, then the next area to test is the 200 EMA at 25k. And yeah, we just use it as support and resistance. Obviously, 200 EMA is a lot stronger than the 50 EMA. If you go down into lower time frames, you'll see that 4-hour crap, get rid of that. I'll get rid of the rest of the drawings in a bit. But if you go into the 4-hour and just look at how price plays with the 50 EMA and the 200 EMA. So the 50 EMA tends to, once the 200 EMA breaks on the 40 EMA, you get to see a decent trend happen after that. It breaks, we've got a break here. That's a bit of more like a dip to buy for further. But obviously, as you can see, once it breaks above the 200 EMA again, you get a nice run. Once it breaks below it here, you get a nice run to the downside. So on the 4-hour, the 200 EMA breaking is a sign of a possible, or I would say most probably more higher probability than the 1-hour that you get a nice swing, either to the upside or the downside from the break of the 200 EMA. And if you go into 1-hour, you'll see that, you know, the EMAs are a lot closer to price. Just more data. The price is just averaged nearer to current price action. So yeah, you just see it's closer to price. The swings, they're still there. 50 EMA and the 200 EMAs are still used as support, but in these consolidation periods here, you can just see that they're just chopped about. So in these consolidation periods here, the EMAs are pretty much horrible to use on the lower time frames. But then once you get back into a trading, into a nice bearish or bullish market structure, they then become useful. So yeah, you kind of want clear market structure to start using the EMAs on lower time frames. Higher time frames, they're more significant and can be used for larger swing trades. As you go up, you can see it's getting the distance of the 200 EMAs kind of getting further away from price. The range or the distance from price, or the distance from where price is trading to where the EMAs are, you can see they're more, they're sort of used better as resistance, whereas the lower time frames, they're kind of just within price. So yeah, that's the EMAs. One more thing about the EMAs, I was just thinking about it and I can't remember it. My short-term memory is shot. What was I going to say? Okay, yes, EMAs close. So as you can see, I have the EMAs as close, and you can have open So what the close does is it just uses the closing price to average out the prices. You can use open, high, low, close. It's just depends on what you want to use. I haven't ever tried anything else. I've always used the close. Yeah, you can use any one of these prices to be averaged. And there may be some information out there on why each one is used. But I've just always used the close. And EMAs compared to normal MAs or simple MAs, price is just the exponential EMAs are weighted, the recent price is weighted heavier than previous prices. So you just get, when price has a sharp turn, you just get a quicker reaction, you get a quicker turn in the lines, compared to if I change this to, or if I even add let's add a 50 MA to the chart. Is it here? No, it's not. Moving average. Yeah, so let's just add a 50 MA and let's see if we can see the difference. So inputs 50 close, so that should be the same, and change the color to white. Yeah, so you can just see that because the EMA has more recent price action sort of weighted, it's weighted heavier to recent price, and you just get that turn a bit quicker. That's all it really is. It's just it reacts better to current price or recent price action. And the numbers are just the amount of candles it's using for the average. Okay, so that's EMAs. And then the last thing I wanted to talk about today is Fibonacci retracements. Let me just get rid of all of this crap. Okay. Get rid of these as well. Fuck it. Yeah, so Fibonacci retracements. If you've done maths at school level, you should know about Fibonacci and golden ratios and all of that stuff, in the UK anyway. If you don't, you're most probably set 8, and I'm sorry for you, but you know, they say don't learn maths, but
hey, you prick, I don't know what that is.
Oh, you're set 8. You're set 8. I'm sorry, bro. My bad, guys. I didn't mean to offend, bro.
I just can't remember.
I didn't mean to offend, man.
You know them kids that got taken out of class? You know them kids that got taken out of class and they was taught by like the mentor? That's what he did.
You can't. Yeah. This guy. It's okay, I'll fuck you up after this.
Yeah.
But yeah, so Fibonacci, there's a bunch of levels you can use. These are the levels I use. I wouldn't say copy me, I would say experiment. But something I've noticed with Bitcoin is in retracements, if it's strong, if the market structure is strong, it doesn't tend to trade below like the 61.8. So if market structure is strong, you should see that swing should somewhere trade at the lowest around the 61.8. And I don't know about this swing though. In this swing, looks a bit more techie. But yeah, so really 50 is just the halfway of the swing. 61.8 is just 61.8 to 78.6 is just retracement, deep retracement, and then obviously that's the return. That's return to 0, and then obviously these are extension levels. So you have your fib. Let's say you used it for this swing here. So that swing low to this swing high, you got that retracement, and you want to now. So you're saying, okay, we're at the 50% fib level. What are my targets if I bought here? So all you do is just flip it. So you take this, put it at the swing high. You take this, put it at the swing low. And then you get your targets. And obviously 1 is a return to the swing high. The 127% fib is the next level, and then 161.8 is the next fib level. And these are all to do with golden ratio or golden mean, whatever it's called. Google it, and Fibonacci numbers. So yeah, and then obviously the big extension is the 272% level. So if these lows hold, you could maybe look for longs to like 82k. Financial advice, but yeah, that's that. Fibs. Anything else to say about fibs? What is there to say? I could say when you put all of these three things together, you can get some good trades. Obviously, when you're placing trades, you want a number of different things giving you a reason to buy and a reason to sell. You can use other people's analysis as well, but within yourself and your own analysis, you want to build what is called confluence. So confluence is just a number of different methods of analysis that give you a bias towards your trading idea. So for example, this swing here, so we got the 50% fib level. We got the 50% fib level. I'm not sure if you would have been able to see it at this price. I don't know if I should rewind all the way back, because that seems a bit long. Let's see. So where's the replay? Replay to here. Okay, so you're getting the high made. Let's pause it. Not here. So you've got this, yeah. So at this level, we've got something called a power of 3, a low surrounded or with 2 higher lows either side of it. Obviously on a 4 hour as well, it might look a bit cleaner. And you've just got this level, prices come into it, and then you've got the bullish momentum building up. We've got the 200 EMA being prices come down into 200 EMA and got a nice rejection. And then so we've got the 50, the 200 EMA, and then we've got, what's the other thing I use? Support and resistance zone. So if I just get my key levels out, you've got a previous area of support and resistance. Yeah, so right there, there's three things. You might use an RSI to give you a fourth thing as well. I'm not sure what RSI was saying at that time. I'm not going to get it up, but we'll look at the RSI indicator at some point. JB, shut up, man, please. Flipping hell.
Listen, yeah.
We're on the call and Danny texting. It's mad.
And then we've got yeah, so that's right there. You've got three things that are
Hey,
giving
King, that one
you.
wasn't me, bro. That was Saki.
Yeah, I know. You got
So why you not getting onto him?
because he'll beat me up, bro. Yeah, so we got three things that are giving you a buy signal right there. So you buy there, and then you've got your run up from there to hopefully, without taking out your stop. You would obviously want your stop lower than this price anyway, but say you had like 5-10% because you're looking for the previous high. Let's look at this. Let's look at this in terms of percentages. So price range. You buy in. Actually, no, you don't buy in here. You wait for a return to this open. You buy. You set a 5% stop. Say 5%. Profit target is the previous high. 28 between 20. Let's say 29%. And then obviously, I would say you would most probably take out all of your money there. Or let's say you decided to only take 50% out and let the trade run for more profits. You then have a run to, what was it, 60 up into the 67s. Andale. Okay, forget that. Okay, let's say you got out on a return below the 60k weekly level. So you would have gone from 53k, another like 20%. Yeah, so 47 at 60k, or let's say 59k. Say 59. Yeah, so about 45%. So yeah, that's how you swing trade higher time frame. Obviously, the swings on shorter time frames might sort of shake you out or make you doubt that you're gonna get that high, but you might just be able to get a bit more confidence on lower time frames. So that's that. Last thing, trend lines. That's the last thing I'm teaching today. Get rid of all of this crap. Trend lines, support and resistance, but instead of straight lines, straight flat lines, they are. I know that was Kamal. No, you're not.
Man said I'm you.
Man coming with high batty boys and with come on, bro.
Respect me, please. I'm here, man. I'm here. Bro, you see GCS?
Come with respect. If you want respect, come with respect, bro.
Hey, man, bro. King. Please. Come with respect.
Yeah, so trend lines are basically support and resistance levels, but they follow the trend. They follow the trend instead of just being straight support and resistance lines. So you can trade the break or you can trade the break of these levels. So for example, this one, this one here is a downtrend as well. But you could trend, actually no, that's a dead example. Let's look at, where are we? November 21. Let's look at March, April times.
Hey, yo. You, man.
Yo.
I just see the funniest shit ever.
But
Jason Derulo got in a fight with two men because they called him Usher.
Yeah, so trend lines.
Are you man mocking it? Why did both of you air me?
Because I'm teaching, bro. What do you think this is?
You told the wrong time to say
What do you think this is, bro? Do you think this is... You think we're in school, bro? Bro, your teacher can beat you up, bro.
I'll fuck you up.
This ain't school. This ain't school no more, bro.
I was gonna laugh at JB's thing, man. JB, these men are all haters. You
What?
don't even know who you're talking about, bro. That's how peak it is. No crap.
Yeah, so
You
basically, trend line, support and resistance.
Wait, who the fuck muted me off the
For
call?
God's sake, I'm muting all of you, man.
And who the fuck muted me off the call, man?
Bruv, I'm muting all of you, man. Fuck this shit, bruv. Yeah, so trend lines. Same as support and resistance. Trade them the same way. You're looking for, I would say, instead of 3 touches, you're looking for 2. Yeah, that allows you to confirm the trend line. So those 2 touches allows you to kind of get a third here. It's not accurate, to be fair. The real one would be there. And really, another thing with trend lines as well, I would say, instead of drawing sort of separate individual trend lines, you just want to clone this and get a channel. Kind of like how you have support and resistance ranges, you have trend line ranges as well. So as you can see, this trend line breaks here and gets retested. You can sell the retest. Similarly, if we can find a downtrend that gets broken, maybe this one here, even though it doesn't really test it on the upside, you can trade the break. You have the 50 EMA broken, 200 EMA broken. You might want to get in on the break of the 200 EMA and have a 5% stop loss, and maybe scaling as price just starts to go higher. But yeah, that's trend lines. 4 things there you can look at, start using to start building ideas on where the market is going. That's it for the lessons today. Now you man can chat shit.
Thank you, Teacher King.
No worries, bro. I've already told your head of year to give you like 2 hours detention in it. So reporting to your head of year.
Man, yeah.
Blood, this sounds like
I know you were
role play,
holding
blood.
your
You man
laugh,
are
innit?
Huh?
I know both of you were holding your laugh, so let it out.
What, for the Jason Derulo thing? Bro, it wasn't that deep, man. Who cares about Jason Derulo?
Yeah, well,
And I just thought it was funny, innit?
you know what it was? You chose the wrong time to say it. That's what it was.
Say nothing.
Man came in like, Jason, bro, I thought you were gonna say something so much funnier than Jason.
Yeah, now word. I thought Big Man
Big
said triple
thing.
upset
And I was
Ty
like,
Jackson.
is this what man is screaming down the place
Right.
for?
See, that goldfish has got him mad, didn't it?
Hey,
Blood.
listen, you man.
Fishy McFisherton's just got him reminiscing, bro. Bringing up the memories for him. He just
Listen, let's be quiet about that, yeah?
No,
Yeah, boy. Let's be quiet.
nah, bro. Fish boy.
Me a real batty fish.
bro. This is going on YouTube.